June 11th, 2019, it's Tuesday, guys, and Chinese stimulus is the deal of the day. From Chinese trade war to Chinese stimulus, the markets are happy. We got deals everywhere. Everything looks awesome, and the market just does not want to freaking cooperate, even though it is clearly at the top part of the trading range where we don't want to be a bull. We want to short the damn stocks. However, it just wants to retest that level yet again this morning, and it's testing everybody's patience, including mine. And days like this is just, is where I like to go run in the morning. So guys, it is what it is. Sometimes the market is not going to give you exactly what you've been looking for, exactly what you've been calculating. It's been really going to try to test your patience. Now, notably, if we look in the history of all the Chinese stimulus, there's two things that I would like to bring to your attention this morning. Number one, typically with any kind of Chinese stimulus, the stocks would have been significantly higher than what they're at right now. And I'm talking about, in particular, all the Asian indexes, all the European indexes. Yes, they're up, they are in the green, but nowhere close, percentage-wise or point-wise, in relation to how they would have rallied in regards to the Chinese stimulus announcement before. And partially, this actually has to do with the size of the stimulus package that China announced. It's more designed to develop their infrastructure and so on. So it's nowhere near the scale the Chinese stimulus that was announced in the 2015, 16, and so on. So the size does matter in this particular case, and it's clearly not producing. Typically, you would see stocks like BABA, Baidu, they would rally 10 points. Yes, they're up pre-market here in the States, but nowhere as much. A few points, nothing really is going on. And the most interesting observation is on this great Chinese stimulus, all the stocks should be moving substantially higher on substantially higher volume today pre-market. But yet, it appears that we're still struggling, at least at the moment when I'm recording this video, that we're still struggling with breaking the levels where the markets was struggling to break those levels yesterday. So as bullish as things could be, yet again, there's clearly some things that we've compared them to the historic developments in relation to similar announcement that tell us, hold on, as green as things are, this may be just a day before stocks reverse and go lower. Now, clearly, we cannot be using this analogy. We've stuck to it. And in the past, when I stuck to such analogies, I've been proven right many times. However, there's certain conditions that we can not ignore, and I'm going to bring them on the charts, some of the things that are a concern. In other words, if they do not take place today or tomorrow, we clearly have to consider the other side of the equation. So, however, if certain conditions do develop today, then it makes sense to stay with these calculations. So, bottom line is, if we are not getting a decisive break above 29.05 by 10 a.m., so if the break higher is going to come, like in a move 1 or 7 type formation this morning on this positive news, then we should be marching across 29.05 and above 29.10, specifically on strong volume very decisively. We should not be seeing S&P futures maybe get into 29.05, 29.06, stalling there for a couple of hours, maybe retracing back to 29, maybe 29, just under 29, going back. In other words, any kind of undecisiveness would actually lead to a sell-off at some point in the day. Not like a great magnitude of the sell-off. We're not talking about the crash, just a reversal, just kind of like a move 11, right? Off the highs by maybe half of the gains. So, and guys, with that said, this is just some observations about directional observations where the market overall could be heading, but get ready because we are going to have some exciting trades going on tomorrow after the market close. We're going to specifically post some charts on Lulu, Restoration Hardware, this has been an awesome stock to trade, and clearly AVGO. Some of you made quite a bit of a fortune on AVGO recently. It does announce earnings after hours on Thursday. So get ready to trade these stocks, guys. Thursday, Friday is going to be busy for us. Going to be highly profitable days on Lulu, RH, AVGO. So we're going to study these stocks. We're going to talk about them tomorrow. We're going to talk about them Thursday morning. So get ready. Make sure you don't tie up, especially if you're trading with a small account. Do not tie up a lot of your capital in these directional trades. Wait for a couple of these earnings plays because they could be absolutely awesome. So top observations are the fact that divergences that we observed in the last couple of days, VIX versus S&P futures, that's gone. Gold versus S&P futures, that's gone too. And the question of the day, will they reappear? Sometimes they disappear and they reappear a day later. So we're going to be looking for a confirmation on that. Now, here's the observation from yesterday. Market is up 5 days in a row. Gold is up 6 days in a row. Pay attention to this candle that was formed when gold was against this 1350 level. This is one of the comments we had yesterday when we described these conditions is we don't want to be buying gold here. We want to wait for a break above. And so oftentimes when something doesn't have to be gold, but in this context, I'm using gold to illustrate what could be happening to a index such as S&P 500 once it is going against a certain level after it's been going up higher for a number of days. So gold was up 6 days, and what do we have yesterday on gold? Pretty significant drop, and that was after 6 days. Well, as of today, with markets opening higher, the markets would also be up for 6 days in a row. So pay attention to what actually happens to the chart of gold, because I think this is what's actually going to happen to the markets today or tomorrow. So looking for an overshoot of the blue is what we're basically talking about yesterday, that S&P 500, we're going to shoot over the blue line and possibly stay there for a day or two. Did we get that yesterday? Yes, we did, and this is how it actually looks. So this was your first day over the blue line. This is your second day. We're really hoping for this candle to resemble this one, and it does resemble this red candle right here because we're trying to parallel the conditions back in May to those conditions right now to really estimate whether the market is going to move higher or lower from here. And this is a bearish reversal candle that was formed on S&P yesterday. And looks like this morning, again, it is going to retest that level. So that is a bit of a different from what was taking place here in May. So maybe similar conditions, but maybe it's going to take an extra day to get to below the blue line. So below the blue line would be crucial because then it sets us for a retest of these lower trading ranges of the tunnel, and that could happen rather quickly in certain instances. Now, I told you I was going to raise some concerns. The main concern is, if we look at every index, I'll show you some more charts in just a sec. This one is definitely bullish. We get a bullish crossover. The black line crosses the orange line on the MACD. That is definitely a bullish thing. However, on diminishing volume. So we're getting some mixed signals on many things here. And clearly, this candle, when you see a bearish reversal black candle formation, it tells you that at these levels, institutional investors are actually taking the money out of the market. Now, it does not mean that all of them are taking the money out of the market at this point. That's why the market is still moving higher. But it is an early sign that the reversal could be coming. So with that said, take a look at NASDAQ yesterday. Same type of candle formation. It's not a black candle, but it's definitely a bearish reversal candle, sorry. Very interesting is that it sits right against that blue line. So it is a significant reversal of the candle because basically institutional investors are watching this level and they're saying, hold on, we don't get a significant break on strong volume above this blue line. Maybe this is going to be a good area to actually lock in some gains. So it doesn't mean they're selling everything. That means they're liquidating some positions, actually making it difficult for the market to move higher. So with that observation, the volume parallels the volume in S&P. It's actually not moving higher as the market's trying to go higher. It is rather steady, however, and here's your main concern again, is MACD is rather bullish. It just made this bullish cross. So the point we're trying to bring with this MACD bullish crossover is if we do get a decisive break above 29.10 today, we could easily be at 29.50 quick. And so if that does take place today, that would be one condition to cut all the put positions, okay, and reposition on the bull side, targeting this level of 29.50. Now, there's a lot of headlines, a lot of positive expectations, and on expectations alone, market could possibly get here. But once the reality hits the market, we can get some nice breaks lower, which are definitely highly profitable for us when we trade weekly options. So, very important day today is the candle, the bearish reversal candle, going to be confirmed by another bearish move 11 or 2 today. That would be very, very significant. Or we're really going to break above this 29.05, 29.10 level on strong volume. As you notice, these bearish formation candles were formed across the board. If we take a look at the chart of Amazon, same thing against the blue line. People are starting to come in and finally take profits on Amazon. Okay, the volume does look more bullish in relation to the indexes in the last couple of days, and we are just getting this bullish crossover. So we're having some bearish signs here. We're having some bullish signs. So it is a mix. And when you get a mix of signs, guys, what is one thing that I try to share with you in a lot of these videos is when signs are mixed, don't trade or trade lightly. Okay, trade light. There's nothing wrong with trading small positions when conditions are uncertain. They could go to either direction. However, with that said, I think we're going to get some clarity specifically on what will take place today, and we can position ourselves going into Thursday, Friday, our most profitable days. We can position ourselves properly and finally reap some rewards from this market. This is what actually happened to gold yesterday. As you can see, here's your bearish reversal candle. Like all the candles I just shown you on S&P 500, on NASDAQ, on Amazon, they are identical to this candle. The pre-existing condition of these huge red candle in gold yesterday was such that gold has been moving subsequently higher for multiple days. Well, that is actually a pre-existing conditions now in Amazon and S&P and pretty much in a lot of stocks out there. So we're likely to see this next. So again, let me just give you a quick refresher. This is what we're seeing now, and what we could be seeing is this next, because the conditions are very much the same. And as you can see, we did have a bullish crossover right here on gold, but it happened prior. It happened before these consecutive days higher occurred. So again, this is the only major concern is these bullish crossovers on a lot of the indexes and the stocks, they are just crossing. And that tells us that there could be a few more days higher before the drop. So back to the trading tunnel range, I think we are going to retest the levels clearly at this 2900 level. At the time, I'm actually taking some snapshots of this earlier in the morning. We're at 2902, so it's reasonable to expect that we will hit 2905. We're probably going to struggle with that range, 2905, 2906. So the outcome of that fight would be very crucial, because that will determine if our next stop is going to be 2950 on these high expectations of everything positive, or we actually going to reverse, not reverse rapidly, but showing some signs of reversal that could set us up for a bigger down days on Thursdays and Fridays this week. So target 28.98 for entry on put side. That was what we talked about yesterday, and so we did hit that level. We went slightly above our tentative stop at 29.05, but not enough. I was actually adding some positions here. They were profitable, and I kept adding. In the move 11 formation, when you realize, hold on, we are heading for an 11, you want to add when the shoulders are created. You want to add because there's typically another leg down that is being formed there. When it bounces, creates another 11 inside of an 11. That is rather bearish. So when you see this, when you see 5, 6 consecutive days higher followed by an 11, a lot of times it will result in a variation of 11.3. Clearly, that was canceled out this morning because we have these unexpected news of Chinese stimulus, and we have a rather warm reaction of the markets to that. But again, nowhere nearly where it would typically put the market. So even with the stimulus, at the point I'm recording this, we're having a hard time breaking above yesterday's high, which typically that would have not been an issue. We would have been way higher than this by now. So in itself, to me, this is rather bearish. So what I'm looking at so far pre-market is maybe we could get another variation pre-market of a move 11. In other words, we could hit this 29.05 level, kind of like this, and start creating that 11 formation. So we could go in a sequence of like an 11-11, which would be an equivalent of an 11-6, an 11-2, 11-11. Basically, two topping moves back to back give you a much higher probability of the next move being a bearish move and a down move, and oftentimes these moves will resolve in a gap lower. So clearly the move yesterday was an 11, guys. It's kind of hard. Certain days they're hard to distinguish which moves they are. Certain days they're easy. It's a simple pyramid, right? You start, you open right here, you hit a high of 29.05, and you close exactly where you started. So if you draw a line right here, I mean, it's basically you're like a point or two away, right? So when you start, when you open in the same position where you close at the same levels, and you see something that resembles a pyramid, that's definitely a move 11, certainly a variation of a move 11, and it is an indication of a top, especially when it is accompanied by these spikes. You see, when these spikes happen on the sell side when the market is actually moving lower, and that's when the spikes in volume higher actually occur. So that tells you that more people are getting out at these levels. That represents selling by institutional investors. Okay, 2-day sequence 111. This is how it looks in the chart. We started out the day yesterday, right, or actually Sunday night when the futures opened for trading. We started with a pop, then a drop, which resembled a move 2. This was the predecessor for these move 11. 11-2, they're kind of best friends. They're bearish reversal type moves, and you know, they're showing an indication that more people are interested in selling at these levels rather than buying. So we started out here, made an attempt to go higher, created this move 11, and chances are we could see a variation of either this or this throughout the trading day today. 5-day sequence 1-7-5-11, 5-1-11. So finally we're getting a bearish move after these solid 5 days of consecutive moves higher. Now, this is what we started to observe on Thursday, right? Thursday going to the close, we've made this move 11 formation. It just stood out. If you look at your 1-day, 1-minute chart, it was just there. It was just boom. It was the pyramid. You couldn't mistake it for nothing else. And we said, hold on, could this be an indication of something? So I think now we actually did get a confirmation that this is an indication of something. This is an indication that the markets are topping at these levels, which was confirmed by a full-blown move 11 yesterday. So you got a predecessor move 11. You had a move 2 formation pre-market when the futures opened on Sunday night, followed by a full-blown move 11. I think between this, I think we're going to see some more 11s here either today, tomorrow, but they could be setting us up for an ultimate reversal lower from here. Now, notice what made us nail the bottom at the day when I was screaming at everybody, buy calls, when the market was dropping, right? We hit this 27.28, 27.39 level. We observed these reverse head and shoulders. So we're seeing a reversal of that pattern. So this has been the predominant pattern. Now we're seeing that this becomes more of a predominant pattern. Move 11 could be taken over the markets again. So again, move 11 versus what has been the predominant pattern. Again, the predominant pattern in the last 6 trading days has been this reverse head and shoulder, reverse head and shoulder, reverse head and shoulder. And then all of a sudden we get an 11 followed by a bigger 11 yesterday. The next market move, meaning for today, June 11th, pretty much same probability of market moves as yesterday. Clearly, if the market does not break above 29.10 by 10.10.15, would be set up for a nice position and go into a move 2 formation. and possibility of another sell-off on an increased volume in the second half of the day between 2 and 4 is actually very likely after the action that we have seen yesterday. Move 7 will definitely be taking place if we get that strong break above 29.10, and then clearly at that point we're cutting the losses on the puts. We're repositioning to be a bull until at least we get a level of 29.50 on the markets overall. Now, the longer VIX stays under 16, the less likely the probability of a fast bounce. So in other words, if we're getting another day where VIX does not, it's actually, yesterday it closed under 16, not far below 16, but 15.94, still closed below 16. Under this environment, when VIX is low numerically, our definition 13 market move formula is low VIX numerically is numeric value under 16. In these conditions, when market is trending sideways or moving higher and VIX numerically under 16, there is absolutely no way anyone should be buying any kind of options out of the money. So far out of the money, just say no, make sure, because those are going to decay very, very fast and they're not going to make you any money, guys. Now, buy options only in the money or near the money. That is what VIX is telling you right now. Key takeaways for today, guys. We're still buying puts. Yes, another day. Market is going to test your calculations. Market is going to test what you're trying to observe. It will do that to you. So don't expect this to be easier. Just expect to be better. And that's what we're trying to do. On certain days, we're going to be able to nail these down to a point. On certain days, we're going to have a bit of a struggle. But overall, we're still considering buying puts at 28.98, 28.905 levels. Betting against the breakout above because of the weak response to rather positive news today, which typically the market would have interpreted in a much more positive way from what we're observing so far pre-market. 2, if breakout above 29.10 happens, cut losses and turning short-term bullish to a level of 29.50. Watching for another variation of a topping move such as another move 11, or a 2 or a 6 variation at certain times of the day, we are going to take the sign from the VIX if the VIX jumps above 16, especially, I want to point this out, if VIX actually breaks a level of 16.53. If VIX breaks above 16.53 at any point in the day, we're definitely increasing the position substantially on the put side, because that would be a confirmation that the market is definitely reversing. The reversal could actually accelerate. We're also paying attention to the action in gold. And, gold so far pre-market is down a little bit, a few points. We'll see how gold will be acting throughout the trading session. Oil prices are a little bit slightly higher. So typically we'd like to see a break in the oil prices below 50 for the market to start actually paying attention to those levels to accelerate the market drop. So with that said, guys, it's going to be a challenging day. It's going to be a tough one, but we've got some good, exciting things if we can figure out and bring some clarity. Today, we're heading out for some exciting sessions tomorrow, Thursday, and Friday. Stay positive. Accept the challenge that the market is throwing your way. Position yourself profitably so you can be successful over the course of the next few days. Guys, let's rock. Let's make it happen. I'll see you in the video tomorrow.